Hey, Carrie, thanks so much for coming on. Now, what is the second edition of the Beyond Tax Season podcast? And I want to bring our audience in and let them know what we're doing and why we're doing it. And I think the best place to do that is for you to start and introduce yourself and your journey for getting to this world of advisory services.
Great. Well, Trow, thank you so much for this opportunity. I love to evangelize the new way of doing business in public accounting. Our mission at CD Bradshaw is to reinvent how professionals and clients experience public accounting. And so that's where we're going. And how did I get here where I'm at today? Started my career with a regional accounting firm, amazing firm, did great work, and about 2014, 15, so about 10 years ago, I started kind of hearing this buzz about advisory services, and I was really curious about that. And it was more of a theoretical conversation at that point. So I started this trying to figure out what that looks like, because that really resonated with me to be to the phrase is the trusted advisor. I really
What,
wanted
what,
to be more of a
what year
partner.
was
Go
what
ahead.
year was
Yeah.
that?
14, 15 was when I started kind of these things percolating in my head and hearing these buzz phrases. And I was curious about that. And I started thinking about my relationship with clients that I worked with. And really, we specialize in construction contractors. And I could really see that there was more that we could be doing for the clients, but I didn't really know what that more was. I was technically trained as an auditor, so I knew how to get the numbers right. But what do you do then? And I thought, well, that's the more exciting stuff in working with business owners is what do we do now? So most business owners have a dream when they start a business, and it kind of falls into a couple of different buckets. It could be they've got a passion for something that's their gift and talent, and they want to do that in the world. They want to create a better life for their family, financial security, or they want to be able to have more freedom in working for themselves. And I wanted to be able to help our clients realize the dream that they had. And none of them dreamed of being a financial manager within their business because finance was not what they did. But that was
Mhm.
something that was where I could say, well, like we understand the numbers. How do we do that? So fast forward to 2016. In 2016, my then she was my audit manager. She's now my director of advisory services. Cassie Fonart went to a class, and it was with Rainmaker, and it was a business development seminar. And one of the speakers was Steve Lefevre from Profit Mastery, and Steve's life goal, his mission in the world is to reverse the statistics that the SBA has put out with business failures. So 80% of businesses fail in their first 5 to 7 years. And it's not because they didn't know how to make it or they didn't know how to sell it, it's that they didn't know how to manage the cash and the finances of the company. And whenever Cassie came back from that workshop, she said, I've got it, like this magic formula that we've been trying to find to be able to translate accounting ease and finance ease into business owner speak. I've got it. I found it in Profit Mastery. And
And
so
Cassie was with
yeah,
you at the other firm.
yes, yes.
Okay. So you're an audit manager in a successful regional firm, and Cassie is on your team somehow?
Yes. So I had been, I was a partner with that firm for 13 years. I had been with the firm for 20 years, and
Hmm.
Cassie had been with me for about 10. So she was my primary
Okay.
audit manager, and I was the audit partner in our
Okay.
Georgetown office at that point
Okay.
in time.
Okay. Okay. Yeah.
So Cassie and I have discovered this about ourselves that we love to innovate and create and do things a little bit differently, and we're not afraid to shake things up. And so we started introducing this concept of profit mastery to the firm, which was a completely different way of interacting with our clients than what it was. A very traditional firm, and again, an amazing firm. I couldn't have asked for a better place to come from. But the board was really not interested in moving forward with doing things differently at that point in time. Um, it's the age-old dilemma of a well-established company, whether it be public accounting or anything else. This has worked just fine for the last 60 years, and there's not really a reason to change that. Now, that being the young whippersnapper that I was at the time, I didn't like that answer, and I thought, well, I think we can do this. I can do it. And so I actually tendered my resignation from that firm. We bought the book of business related to the Georgetown office, and we took off and moved and
Yeah,
wanted
you
to.
forgot,
Yeah, yeah.
but from our first conversation, you forgot the part about you felt the calling and you had the faith that you were getting a message and it was the right thing to do with your talent.
So you jumped ahead of me there.
Oh, I thought that conversation. I'm sorry. I'm sorry.
No, you're good. You're good. So, what I realized in that was really that the Lord had laid a mission on my heart, and that this was something He wanted me to do in the Central Texas community, is to get out there and work with business owners and help them realize their dream. Um, and sometimes He closes a door for you so He can open a window, and that's what He did. Um, the firm that I'd been with for 20 years, it's hard to change. It's hard to make that leap. And I'd been getting that nudge for 3 or 4 years that He really wanted me to be doing something different, that the Lord had a mission for me.
Mm,
And I
mm,
finally accepted that that
mhm,
was the
mhm.
case. And Steve Lefevre at Profit Mastery was one of those windows that got opened. um, the office, there was 11 of us in the Georgetown office, and when I went to the team and said, "Hey, this is kind of what I'm thinking," they 100% raised their hands and they're like, "We're in. Let's do this. Let's get out there and help some people."
All 11?
Yes, and we had a
That,
97% retention rate of our clients,
wow.
which is, I think that's a testament to what a great job the team does taking care of clients. That they were like, "Well, we don't care what name's on the door. We just care that our person is still there, who's going to take care of us." And clients were really excited about what we were talking about, the model moving forward. And um, between then and now, we've hosted over 12 Profit Mastery seminars. Hundreds of business owners have gone to those classes, and we've had 100% satisfaction with that learning. So, we have people who have been in business for 30 years, and they're like, "Wow, I wish I had known this 30 years ago. I wish I could have just paid $600 and learned this. I learned this through the School of Hard Knocks, and that tuition was expensive."
Yeah, yeah, yeah. Have you noticed how people complain, comment about the cost of university or college tuition? And you and I know that those are actually pretty small dollars compared to some of the what we paid for the lessons we've learned.
Yes,
Well,
yes.
that's
So
awesome.
very true. So very true. Yeah.
So that's your journey to discover and desire to provide advisory services. The I have this little script we nailed out here. The old guard reaction, your choice to follow your calling, and what are the details of this model? And it just came to me. What is the contrast between profit mastery and profit first?
I'm not incredibly familiar with Profit First. I have some clients who have done that. And as I
Mm-hmm.
understand it, Profit First, the tenet is to make sure that you pay yourself first so that you are staying ahead and that you're making sure that you're getting a return on your investment in the company. That's how I understand Profit First.
Right, and so
Um,
because we're on tape, I'll use very, very polite descriptions. It's behavior modification by keeping the cash from being visible in the business owner's bank account because you and I know most business owners run their business from the balance in their checkbook. And so if we take that money from being visible, their profit becomes an expense, then they can't just spend it somewhere else. That's my
Ah,
understanding. Very simplified, and a profit first professional would beat me to smithereens with that description, but that's basically how I understand it.
okay. All right. Well, that helps me kind of put that in context of how profit mastery is a little bit different. So, profit mastery is really about understanding the cycles within your business. You have a financial cycle of how money and profit flows through your business, and so that's made up of two subsidiary cycles, which is your cash flow cycle and your profit cycle. So, profit mastery is about understanding the distinction between those two and the importance of managing both. Most business owners in their early years will be very focused on that profit and loss statement. Like they're very concerned about sales and they're very concerned about net profit to the extent that they will neglect cash flow management. And they're growing broke is a phrase that we hear, and it is very real. As you grow a business, growing a business takes a lot of cash. And so, as you're growing a business and you're investing in assets to be able to produce those sales that creates this growth, your balance sheet is drinking cash. So it's helping a business owner understand how those two components work together and how to manage both. So there's various different tools within profit mastery, and this is part of what we do in our FP&A coaching practice. Is we help business owners understand their scorecard. We believe business is a game, and we're all in it to win. And so you got to know what the score is. And so we help them use a scorecard, and their scorecard is made up of primarily financial ratios. And there are profit based ratios: gross profit, contribution margin, net profit. There are balance sheet ratios, so accounts receivable turnover, how quickly am I collecting AR, accounts payable turnover, how quickly am I paying my bills. You should always pay slower than you collect so that you're working on other people's money. So we talk about that. And then we look at efficiency ratios. So those are things that take numbers from the balance sheet and the P&L. So great example of that is a fixed asset turnover. So how many times am I turning? We look again with contractors, equipment is a big part of their financial investment. How many times a year am I turning that equipment into sales? And then looking at a return on their assets.
Wait a minute. So I own a dump truck, I own a loader, I own a whatever. That's a fixed asset, right?
Yes.
So you say turning. Turning to means that they sold it. What do you mean by turning a fixed asset?
Great question. What I mean by turning a fixed asset is that I bought an asset for a purpose, and my purpose for buying that asset is to generate sales. So if I bought a dump truck, I need a dump truck on a job so that I can perform the services that I need to perform on that job to then generate sales. So you look at how are you using fixed assets to generate sales. So if I have a dump truck and we'll just use simple uh, concepts here. So if I have one dump truck and I only generate $100,000 worth of sales on that dump truck, and I only pay for it once in a year, and I have one turn, well, that doesn't make sense. Like, how many times am I using that dump truck during a year, and how many dollars in sales am I generating through the use of the dump truck? So that's what I mean by
I'm gonna
asset
understand it.
turnover.
I'm gonna understand this. For a simple business model, I'm just a hauling company. So my dump truck is my only asset, and I'm getting paid for hauling. And I only, it cost me 100,000 and I got 100,000, then that's not a good turnover ratio. So is there an optimum turnover ratio on that simple model on this fixed asset?
So The answer is yes, and it depends on your industry. So that's where
Hmm.
we move then in our FP&A and we do benchmarking studies. So we
Hmm.
look at if you're a hauling company, then we
Hmm.
go out and we use a software called Profit Sense, and we'll also use RMA. And we'll go look and see in a company similar size to you, similar industry, and if it's a big enough population, we can do like certain parts of the country. So we would just look at South United States for somebody here. And we would say, what does the industry do? Well, in the industry, your competitors, your peers, turn over that dump truck 20 times a year. So they're paying for that truck 20 times a year, and you're paying
Got
for
it.
it once a year. And
Got
so
it.
then that's the part of our coaching as well, is that we look and we go, okay, where are you in comparison to your peers? Because the theory is if a peer can do it running the same type of company you are, you can too. It's just the difference is management between your company and the other and your
Well,
peers.
it's also awareness, right? You know,
Mm-hmm.
you're bringing
And
an awareness to them of what is possible.
mm-hmm. Mm-hmm.
So in our we're really starting to get on a roll here because from our first conversation, you said you basically run a school, and your goal is to graduate them out of the school. So that's part of your service offering is that you educate as a service. That to me is so novel and so leading edge that I think more people need to know about it because yeah, just it seems to make sense to me.
And that teaching, because so one of our core values is to empower, and we believe you empower people through education. And we have two primary components in our education. Well, we just added a third. I have to remember that. So we have three components in our education piece. We have controller coaching, where we can come into a business and they have a pretty good bookkeeper who's probably like a cash receipts disbursement bookkeeper, but never took the next step to either get their degree or to get their license, or they're perfectly happy with where they're at until they're not and they want to learn more. So we can
Hmm.
come in and help, we can up level the skill set of somebody that's in your business. They are loyal to you, you trust them. There's a lot to be said for that. And so then we up level them with technical skills to be able to do what we call a month end close. So they can give you a fully complete and accurate set of financial statements, a balance sheet and an income statement. And because we're in the construction world, a work in process. And the phrase we use is surety ready. So a lot of our contractors need bonding. And so they have an underwriter at the surety that's going to evaluate the financial statements, and being able in-house, because this is a differentiator and a competitive advantage for our clients, that they can push a button and give their surety accurate, timely financial statements. They don't have to say, let me call the CPA and get them to do it. They can just do it right there.
So,
Fun story.
so
We
that's the
had a
story. I
special
wanted you to tell that story.
so we have a specialty contractor who went through the coaching program. They'd been in the coaching program 2.5 years when this happened, and we'd actually been through a couple of people that we coached, and we were on our second controller that we were coaching there, and the bonding company called, or they needed a job, and the bonding company said, okay, well, we need financial statements. And the controller produced financial statements, had it to them that day. They looked at, an underwriter knows when they look at a financial statement if it passes a smell test and they know that it's accurate and correct. And they looked at it, and that specialty contractor right there on the spot, that bonding company tripled their bidding capacity, tripled their bonding capacity because they had timely, credible financial information that gave them a lot more confidence in the financial management of the company, which is huge because the surety is taking a calculated risk anytime they put a bond out there that you're going to run it. You're going to run the job. You can do that. Most contractors can pass that one. but also that you've got a financially sound company that you're able to do that. So that whenever I'm trying to convince people that this really is you're going to get a return on the investment, that's I can put dollar and cents to what the return on your investment is.
And you know what?
Tripling your ability.
Yeah, that's amazing.
I'm sorry.
I said that's amazing. So as I was thinking about, okay, so this is the Beyond Tax Season podcast, and each episode needs to have a neat name. I'm thinking of naming this one "Scratching Your Niche"
I love it.
because you have
Yes.
gone.
Yes, let's do it.
Let me write that down. Scratching your niche. Because you're just a perfect example of that guidance that we've all been given to niche down, if you will. Uh,
Hmm.
and so let's talk about that. How did you, I think you said you have two. How did you fall
Hmm.
into or decide to scratch this niche, dig so deeply into this niche?
It there was two avenues that brought me here. So the first being my dad. So my dad was a master electrician. So I've been in the back of a warehouse sweeping from the time I was big enough to push a broom. And at that time I thought it was fun. So, you know, those things that kids enjoy doing. So, and I watched my dad have these same struggles of working in the business work versus working on the business when he had his own business. So that was I feel really comfortable with contractors because I grew up around contractors. So I understood their
What
struggles.
level?
I understand their
What
speech.
Yeah, yeah. Well, what level of contractor? Because you've got the master plumber that's working out of his own truck. Where do you
Hmm.
find your sweet spot is in their development? Can you take them from the truck to 20 million?
They need to be a little bigger than the truck. So the
Okay.
at the truck level, they can still handle it. They can still get the bills paid. They can still invoice. They haven't started feeling the pain of it's gotten too big for me. So it's when they've hired 5 to 10 employees. And now
Mm,
all of a sudden they've got to figure out payroll and they need somebody else to keep the books because them doing it at night after they get home doesn't work. So somewhere in the $1 to $2 million range in revenue is a good one for us to come in and get started. We like to start about there because they haven't made some irreversible decisions. They haven't made
mm-hmm,
irreversible decisions with the type of entity that they are for tax purposes. They haven't
mm-hmm,
made irreversible decisions with investments that they've made in software. They haven't gotten down too far down the road of their
mm-hmm,
internal processes and accounting. It's always easier to build something from scratch than to repair something that's already a little broken. And then our largest contractor is a $150 million contractor. So our real sweet spot is the 5 to 25 million. That's where in our advisory services, once they get past the 25 and in the 50, they have the resources to hire somebody who's capable to come full time. So one of the criteria really is that they can't they can't afford nor do they need a full-time person. So it works on I
mm-hmm,
hate this word, but it's the word that's out there, fractional basis. So they can have somebody come in. A lot of times it's the wife who keeps the books because who do you trust more than your wife? Because it's her pocket too to keep the books. That's
mm-hmm,
what happened to my mom.
mm-hmm.
My mom was the bookkeeper for dad. So she was my first coaching client actually, though we didn't call it then. I taught her how to use QuickBooks. And then we've had clients that they bought their parents' business and their wife was a teacher and she had never opened a accounting software. And it takes about 24 months with somebody like that to go from how do I open QuickBooks again to here's a balance sheet, P&L, and L, and a WIP schedule. So that's always fun to have to
Right,
empower
right.
somebody who was in a different profession who would have said, "Well, I'm not good at math." We
Well,
also have
let
a
me.
children's ministry leader that we've taught how to keep the books
Mhm, mhm.
for a contractor. That's kind of fun.
Let me bring a problem from my own practice where I'm working with an accountant that had a guy that still is a full-time union electrician, but now he's got a team, depending on his volume, of two to four. And it's like, do I take the leap? Do I commit to that team of 10 so that I'm now doing 2 million instead of 800,000? You know, what have you empowered people to make that leap, to say, oh, this is what you need to do. These are the steps.
We have one client. This is one of our few clients that isn't in the construction world, but we have a quasi manufacturing company. They're a printing company, and we've in working with them since 2020 was when we first started working with them. And as you can imagine, there was a lot of need in that period of time of pivoting and understanding the financials and what do we do. And from we have a tool called a break even analysis. And don't let the name fool you. None of us are in business to break even. It's really just it's a tool to understand cost and contribution margin, and then how that plays into volume. And
Hmm.
so
Hmm.
they had plans that they would like to have, that they wanted for the business, to hire employees, to maybe buy a building. And so we use the break even analysis tool to determine how much sales they need to support the plan. So in your example of, I'm an $800,000 guy and I want to be a $2 million guy, well, we can see in our client base other $2 million businesses. And so we know what the infrastructure looks like. So we know what the cost would be. And knowing that when somebody is growing at first, you are not going to be as efficient. So we would back down kind of the expectation of the efficiencies that they would be able to produce. They're not going to be able to do that at the same level that somebody is a $2 million contractor and has been for 10 years. So some of
Hmm.
that's the learning. And then we put together a model of what we would need and then what is the time period. So you're not going to go from 800 to 2 million in a year, because that's just too much change to manage that quickly.
So let's. I love what you do. I'm imagining you don't have any problem finding business. Business probably comes to you. We wanted to let people know how to get in touch with you and who should get in touch with you as part of our discussion. Can you do one fat from the fire story?
I'm not sure if I know what fat from the fire means.
Uh, I did my break-even analysis, and it looks like we're out of business in 6 months.
Oh, yeah, I can do one of those. I got two of those. Okay. In Hereford, Texas, I don't think I ever heard that phrase. So now I've learned two things here today. I've learned about profit first, and I've learned about that phrase, "fat from the fire."
Yeah.
Um, so working with another specialty contractor, this contractor would spend hundreds of thousands of dollars on entertainment, and
Mm.
called that, this is business development.
Right.
Only a $10 million contractor. Like the numbers, and I did sit down with him and his leadership team, and I said, based on your current spending, if you don't grow this company, don't grow the top line of this company by 25% in the next 18 months, you will be out of business. And he fired me. And then 18 months but later, he came back hat in hand and rehired me and said, I am in debt to the top of my gills, and I want you to help me manage this. And we did. And that was almost 5 years ago. And he is currently working towards building the business into a model that he can sell. So 5 years ago, he was broke and could not pay the bills. And
That's
then
it.
we went through this process of trimming the fat
Yeah, yeah.
getting rid of. Now, he wasn't
Yeah,
very
you're
happy losing his
cross
entertainment
pollinating.
budget.
Yeah, cross pollinating concepts there. Fat from the fire and trimming the fat. Let me quickly
Yeah.
recall something from our first conversation where, goodness gracious, oh, I guess part of the profit mastery process is you ask their dreams.
Yes. So there are three uses of net profit after tax. You can reinvest it in the business. You can pay debt if you have debt. That's you've got to generate profit in order to service debt, or you can take it home. So when we budget with a client at the beginning of the year, we start with those three uses after net profit. So what do we need to pay debt, if anything? What are your growth strategies for the company? And we have a tool called Financial Gap with one A. Those of you who are accountants out there listening, not generally accepted accounting principles, but what's the delta here that we need? So we use our financial gap to determine what they might need to invest in the company, and then we just ask them, what do you want to do? Do you want to buy a cabin in the mountains? Do you want to buy a beach house? Do you want to buy a new building? Have you had your eye on a piece of equipment that you know would just be a game changer for the business? Or do you have something like, what do you want for your own personal financial rewards from the blood, sweat, and tears that you put into the business? And we start with that number. Here's the number that they want in their perfect world, what they would use money for after their profits. And then we work our way back up. So what are all the fixed costs within the company? What's the contribution margin that they're functioning at? And so what sales do we need to make all of that happen? And sometimes we do that and it's something they can do in a short term. And sometimes we do that and they go, that would take 5 years to do that. Like, great. Okay, let's put a plan. Let's put a 5-year plan together of what's the marketing strategy? What's the sales strategy to be able to make that happen? And then what's the infrastructure that we need within the company to be able to support those sales? Because as you grow, your needs for people change, your needs for office space change, and so that there's a different component of cost. And so let's model that out. Our
Yeah. In your relationship with your clients, do you get the "Where have you been all my life" kind of comment?
Absolutely. All
Right,
the time.
right. I mean,
Yeah.
so you and I had never met till last week, but you essentially personify my purpose in life, and I shared it with you in our first meeting that I want to basically setting a rhythm now. We're on the second one. I probably ought to start with it and end with it, but my purpose in life is to improve, to be the catalyst to improve the business of public accounting and the relationship CPAs have with their business owner clients. I do what I do so that CPAs and their business owner clients reap the most value from what they've spent the last 10, 20, 30, sometimes 40 years building. You are the personification of that mission. How do we get more folks into this realm of service? How do we get more accountants to take off the blinders, not be that old guard at the wonderful firm where you lived or where you got your first start to the first leg of your career? How do we help them understand how powerful they can be and how much fun it is to do it?
I think you're making a great start here in just letting those of us who have done it and maybe have been I wouldn't say silent, that's not a word that would ever get used to describe me, but maybe quiet and in the background
Hmm.
CPAs. We have to, as an industry, really tell the story of the small to mid-sized firm because that's where these things are happening. That's the grassroots. It's the 40-year-old firm owner who is building it different and has the courage and to get out there and do it. It's It's the 25-year-old that comes out of school and says, well, that's stupid. Why do we do it that way? Why don't we do it this way? And then they have somebody who says, I don't know. That's how we've always done it. Come on, come over here. I think we have to, as an industry, we have to begin to embrace innovation. We have to divorce Sally. That Sally is same as last year, and because Sally's comfortable, and Sally's known, and Sally's predictable. And if the pandemic didn't teach us anything else, it's that safe and predictable doesn't exist. We really have got to get out ahead of this.
Carrie, that's a wrap. I want to thank you again. That we got together. It's wonderful we did. LinkedIn marketing works, huh?
Yes.
I'm not going to say this is my second, but it's and our first. I'm not going to say it's our last. I'm thinking there might be repeats because there's so much meat here that is still to be unwrapped, and because you truly are a leader. There aren't not that there aren't others, but you've packaged it. You've created uh, an easy to understand, easy. I say easy. I don't know how hard it is to deliver, but something that's deliverable, it's concrete, and people are better off for you having been in their lives. That's just an awesome way for you to build your business. So thanks very much for joining us here on Beyond Tax Season. And what did we describe? Say we're going to name this episode?
Scratch your niche.
Perfect. All right, so we get to end the recording now and stop.